Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man, Dimitri Pargamani.
Good morning, Will. How are you?
Good. Let me bring up the disclaimer for everyone to see. There you go.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
Let me share my screen. And while I'm doing that, if anyone there is joining us for the first time today, Will and I, we do these shows in the morning to help answer questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on the show and ask your question live, we provide a link to Zoom. Click on that link. It takes you over to Zoom. Once you're in Zoom, there's a button there, raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, you could ask your question live. If you prefer to type your question in, you could do that on the live chat on YouTube. Type your question in there. Will's watching it. He'll read them back to me. And while we're waiting for more people to join and people to put their questions in, we'll start out with the pre-market report, see if we could get some insights in what's trading in pre-market hours. If we don't have questions, I'll navigate to our VWAP table, which we pushed out, and I believe we did another upgrade yesterday. So we are working on that section, and you're going to see it changing as we go along, but we'll discuss some of those features, what type of insights you could get from there. And of course, if we do have questions, Will let me know. And I did remind you I have to help out a friend later today, so I might have to jet out a little bit earlier today. So we'll see how it's going. If we get questions, I'll try to answer those before I leave. Okay.
All right, perfect.
So pre-market report. These are stocks that are trading in a pre-market hours. We have a list of our most active stocks, our biggest percentage gainers, biggest percentage decliners. Down here, I see 47 stocks made our percentage gainers list, 59 on the decliners. And from this perspective, looks like a slightly bearish bias at the open. If we take a look at this list, you do see that there are small cap stocks in there, ETFs, leverage products, pretty much anything listed on a major U.S. exchange. If it's trading at pre-market hours and meets our thresholds, it can make this list. And what we want to do is start to narrow down this list to a smaller group of stocks, get a little bit better insights that way. And we could do that by using the filters here above. This one in ETF, I'm going to use this one right now. And when we click on it, you see a drop down with a list of different ETFs to choose from. We got some broad-based ETFs up top, some sector ETFs below that. And we're going to choose SPY. That's the S&P 500 ETF. Let's click on that. And when we do that, the list below gets filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. And here we do see 7 stocks made our percentage gainers list, 13 on the decliners. So from this perspective, slightly bearish bias at the open, not a really big list. And we still have earnings coming out. And under these alerts, when you see this little E, these are symbols, stock price change in the pre-market, volume, got the market cap. These are the alerts, that little E is indicating that it just released earnings either yesterday after the market closed or this morning before we open up. And the stocks could be reacting to it. If there's news, headline news that we see, they'll be under there. So just to save some time to go over some of these new features, there are
we did have a question from I think it was from Aaron. He said,
Okay.
and he's asking about the at the money. Is it possible to see expected move on a stock, i.e. at the money straddle? I guess he may be a new user and wants to know if, I don't know, let's pick any stock, Tesla.
Okay.
How can you see an expected move in Tesla?
Yep. Okay. So I'm gonna guide out of here then. I mean, there are a couple, well, yeah, let's just go to Tesla. So a couple ways to look at the expected move. One, we could look at the option straddle. So over here, we can see this is the options chain. We've got all these different expirations over here, right, going out in time. And what we could do is come here to this activity report. This gives a summary of these expirations. All right. So these are the same expirations. We got one May 5th, May 12th, May 19th. And these are the implied volatilities here. I'm going to skip this for now. Volatility skewed. This is the volume breakdown. But what we're looking just to answer the question is, what is the straddle implying? Okay. So the straddle, if you're buying a call, you're buying a put, there's a price to that straddle. And here we're listing, these are the price of the straddle for these specific expirations. And these are the number of trading days to go. So of course, as you go out in time, you have more time premium, you have a longer time for the stock to move. These straddles will get more expensive, right, as we go out further in time. So these are the dollar prices, and what is the percentage move in the stock to cover this straddle? In other words, if you're paying $6.40 in the straddle, then the stock has to move by $6.40 in either direction to break even, or higher than that for you to profit off the straddle. It has to cover the cost of both those options. And what is the percentage move? Well, this is the percentage move. So we're converting it to percent move from the spot price. So to cover $6.40, we're talking about a 4% move in either direction to cover the cost of that straddle in the next 3 days. So that would be the implied move for that straddle by expiration. And when we think about options from the perspective of the Black-Scholes model, the Black-Scholes model converts implied volatility. We'll take this implied volatility over here, and well, it actually starts from the option price, converts it to the implied volatility, and then you could figure out, well, what is the average daily move expected or the expected average daily volatility in the stock, up or down. So it does it in log returns, okay? And that is if you're trading the implied volatility versus the realized. So it could just move up and down, back and forth, and at the end of these 3 days, the stock could be unchanged, right? So it can still move around, and by the end, it could still get to the same price. So in 3 days, we could be unchanged, but the implied volatility is measuring the moves, the fluctuations in the stock. And for that, we could come over here under volatility. These have been the implied moves day to day. So based on the nearest term option straddle, we take the implied volatility, convert it to a daily expected move, and then we measure it with the next day's move. Now, those implied volatilities could really move around. If you have events, you have earnings, whatever it is, the options are going to go up, then they're going to come back in. So those things can change from day to day, but this gives you just an idea of the daily expected range versus the actual move if we convert it to the implied volatility to a daily average move. Okay.
He also asks how you can find what a one standard deviation move. I think we showed that something like that to Michael a week ago or something. That was another question.
Basically the straddle, right? So it would be basically the straddle is that's what implied volatility is, right? So one standard deviation move annualized, right? So then you would convert it to a daily. So when we talk about a standard deviation move, you have to assign it a time range. So one standard deviation move in one day is different than 2 days, is different than 3 days, is different than 4 days, right? So you do have to assign it, well, a standard deviation move in what time frame? Are we talking about 1 day, 2 days, 3 days? So that's essentially what this is a standard deviation move for this time period. You can think of it that way. Is a standard deviation. So basically 66% of the observations in theory should be within this range. Right, up or down.
Yeah, he's asking, I don't know exactly. He's saying, appreciate the average expected move page. However, the ranges are for today and previous days, not future.
These are future.
Have you seen? Options. He's asking, have we seen options AI version of the expected move? And I've not, but I could look at it.
Right. So these are coming from the options markets, which the options markets are basically forward-looking instruments, right? These are the expected ranges in the future, not in the past. You can look in the past, you could look at the historical data and look at the ranges the stock has moved in the past, but option markets are forward-looking, and these are the market expected ranges that we're deriving from the options market. So this is what going forward, right? These expirations are going forward, not backward. So these are the expectations going forward, and that's how the option prices are being priced.
There you go. Hopefully that helps, yeah. Aaron. You can always email us support at MarketChameleon if you want to show us a screenshot from another spot you're looking, so we can look at it and get back to you on it. So thanks.
Right. And again, when you talk about standard, when you throw it out, you're talking, you have to also say, well, standard deviation for what time periods, right? So you'd have to define that part. Let's go to, there are no questions. While I'm on Tesla, I'll just use Tesla as an example. So a couple of things here. We talked about this summary page yesterday, I think the day before. So I'm going to skip this for now, and I'm going to go to the VWAP table. And in the VWAP table, what we do is we take the volume on the day, okay, and then we start to look at it in more detail because there are lots of trades going on throughout the day. And grouping them and analyzing them and classifying them can give you more insights. And, think of it as, when people look at option volume, there's unusual option volume, but, what's unusual about it? You could go look at what strikes, what particular options people are trading, strategies, and so forth. And kind of what's happening throughout the day in the volume could also give us a little bit more insights, what happened at particular times, how it happened, and start correlating it or linking it to other data. So I'll give you an example, so this is looking at regular trading hours. Okay. And during regular trading hours, what we're doing is summarizing the volume by minute. So this is the VWAP table minute by minute. So for each minute, we take the volume. So this is the volume between, the minute 3:59, beginning of 3:59 to the end of 3:59. That's the volume. That's the amount of trades. Remember, we're looking at stock trades right now. This is the volume weighted average price. This is the tick, the change from the previous VWAP. We have the high and low price within that minute. And this is the ending bid and ask of that minute. So we could compare, well, where did the stock volume weighted average price trade in that minute versus where did the stock basically close, the bid and offer close at the end of that minute. So we could see that this was lower than the VWAP, right? We do list some events here. I'll talk about that. So burst types events. Here, we also give some more stats within that minute. So 4% of the trades in there were sweeps. If you click on it, I think you get a pop-up with a little bit more information, but let me go through each one. 24% of the volume were block trades. So we define it as $250,000 or higher in a single trade. All right, so if we click on it, we'll get a list of all the block trades in that minute. So we get, the notional value of the trade, the quantity, the price it traded at, the market at the time, and the exchange. So we could see which one's traded in the dark, which one's traded on the lit. Then we have what percentage of the volume traded in the dark pool versus the lit. So we could click on that, get some more info. And what percent of the volume we consider institutional volume. So we could click on this, get a little bit of a look at the institutional volume. So the institutional volume, it's similar to block trades, except we do have additional conditions in there to detect institutional volume. So an institutional volume could be a really quick burst of lots of trades because it sweeps the books that add up to a lot of volume. So if we detect that, hey, this particular burst is coming most likely from a large order that's sweeping the book simultaneously. So it didn't look like a block trade, because a block trade has to have the same size of, one side is buying 5,000, one side is selling 5,000. But what if you have one side buying 5,000 off the limit order book and sweeping a bunch of 100 lots there, right? So the institutional volume has more conditions in there to detect it. So we got 38% of the volume in that minute that we detected were most likely coming from larger institutional. So not your, like typical retail trades. So these are some of the summary stats here. And then we have a couple other indicators here to help us along the way, what we think might have happened in that minute. So over here, we do have a burst type here. So we got an indication here that something happened in this minute that was unusual, that looked like a large, what we detected was a sell burst. So why is that? We keep track of the normal volume for each stock, and we do it by, the time of day as well. All right, so early in the morning, late afternoon, end of day, and then we measure anything unusual. We detect as 2.5 standard deviations away, and then we take a look at that volume and what we think happened. So we could see here that this volume, 608,000, you could see, that all of a sudden something happened there where a big volume trade occurred. So this is going back, and I'm going over here. So you could see 351, there was 351,000 shares, 368, all of a sudden we got this 608,000. So that detected that something unusual happened there that caused that, because that's not your typical volume. And what happened on this? So we could compare the previous VWAP. So this was where at 341, we could say that's where the markets were looking at the fair value around 159.37, and it dropped to 25 cents. 25 cents the VWAP, 159.12. So given this price action and the volume, we infer that there was a larger sell order there, hitting those bids, hitting the market lower. And we could see at the end of that minute, this is where the market ended up, 159.01, 159.03, the bid and offer. So whatever reason, there was a sell burst there. So we tag it, so this is information we could potentially use later on to link it to other things. Now, it's not, just to let you know, these happen, these buy and sell bursts do happen, every day. So we'd have to look deeper into why did it happen? It could have been an options trade and so forth. So we want to then stitch that information to something else, but that is tagged here. And up here, we have a list of the bursts that we detected. So the time and what type of burst. So we have buy bursts and sell bursts, right? And then we track on the sell side, how are they doing? And on the buy side, how are they doing? So if there was a buy burst and then the stock floated lower than that, then we say, well, that buy burst kind of failed because whoever bought that at that moment, right, would have gotten a better deal right now. The stock floated lower. Okay, so he would be out of the money, we'll say. He'd be sitting on a day trade loss. Sell wins here. That's if somebody sold it on the sell burst, the stock went lower. Well, that was a good sale, right? Because they're in the money. They could buy back the stock cheaper if they wanted to. So they would be in the money. And these are sell fails. So they sold it. And after they sold it, the market floated higher. So they would have been better off not selling it at that moment. So that's what these are tracking them. And if you wanted to go to it, a specific one, you click on it, let's say 1129. So just highlight it really quickly. Here's at 1129. You see these big volumes popping in here, then going down. So around 1129, we see here a big volume trades on downticks, right? These are on downticks, driving it lower. So those were, we detected as sell bursts. So right around, it looks like a bunch of them clustered around here, 1129, 1133. So we will be adding more alerts to this to see if there's other things going on in the market or in the options market that could have explained some of this, away. So that's coming. But so far, that's how to look at these indicators. Okay, that's what these indicators are telling us. Couple other things with the VWAP, we only have a couple minutes to look for is here. I'll go to, let's start around here. So typically you'll also see volume pick up in the last couple minutes. Okay, so you'll see, over here, you will see volume picking up in the last couple minutes of trading. And that could be for several reasons. So one is that there is an imbalance at the close sometimes. So we do have market on close orders, limit on close orders, that there's a single price auction when the specialist closes the books. And, there are people who subscribe to that real time imbalance. And right before 4 o'clock, if they think, hey, you know what, I think that it's going to close on a downtick, then there are people who might play that 160.38, for a couple pennies. So that's one possibility. The other thing is that there are strategies throughout the day. So there are day strategies that need to get balanced at the end of the day. So it could be a pairs trade. It could be, option deltas that are accumulating throughout the day, or you have a position and stock moves, so your gamma gives you a delta. And sometimes the strategy is just waits till the end of the day to balance that risk. So you will see, for several reasons, we're gonna get some insights. So we didn't detect that there was an unusual pop for these last couple minutes. All right, because otherwise we would get that burst. And what this is saying is, for last couple minutes, this is typical volume. But it kind of gives us an indication, if we see very big volume, it could mean that there are big positions out there in the stock that are getting rebalanced. There could be players in there trying to play that, market on close, where auction. So those are indicators, to look at. So if you, for example, dealers have large gamma positions, you might see a bigger spike at the end of the day to balance that delta risk, or get back to closer to neutral. Some VWAP orders might get cleaned up at the end of the day as well. So that's up here. And I'm sorry, I gotta go. It's already 9:30, and I did.
All right, we got a question from Aaron at the end about somehow tracking trades. I'm going to send that over to you. Maybe we'll look at it tomorrow. Awesome job, Dima. Thanks for joining, Chameleons, and you have a great day, buddy.
All right, guys, everybody stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Yeah, actually, remember the thumbs up and hit the subscribe button too, please. Thank you, D. Bye.
Thanks, Orin.